Hello and welcome back. Francois, welcome back.
Thank you.
Nice to see you again. The first 100 days of the new Donald Trump presidency have started with his inauguration just a few hours ago. He's promised to introduce a batch of measures immediately. So, Francois, the question is, which of those measures do you think are going to make the markets move, positively or negatively?
I would say that you have different issues, but at the end of the day, you have different factors in the economic plan of Trump's that are going to be observed very carefully by the market. The first one is the tax issue, really reaffirm the tax cut of 2017. Second one, really lower even further the tax rate for a US company. There will be the tariff issue. There will be the immigration issue because at the end of the day, immigration is also an economic factors. If you expel those workers that are illegal immigrant in the US and are working in the US for some of them, it means that you are going to put some pressure on the labor market. You could introduce some pressure on the wage that could rise further than what was expected before because the market will be less supplied by workers. Then there will be the deregulation issue, because we all know that he really wants to deregulate. He wants to lower the importance of the states. There is this dodgy department that was created, and we all know that they want to suppress jobs. So there are a lot of factors on the economic side that are going to impact the market and that investors are going to look at very carefully.
You mentioned tariffs briefly. Can you expand on that a little bit?
Tariff is a big issue because we all know that there is a kind of the art of the deal, as Mr. Trump used to call it. We don't know yet. We have some information that maybe on the tariff issue, it's not going to be a full implementation of the proposal of a 20% tariff on everything, plus 60% on Chinese goods. Tariffs are very dangerous. When you enter into tariff, you can have retaliation. You can create a kind of commercial war. Commercial war are not necessarily something that is very positive for economic activity on the one hand. On the other side, you could have some short-term inflationary development that could appear through the tariff issue. So that's the reason that it's so important. Lately, you had some rumors, articles saying that he's not going to implement that immediately. He's going to go progressively. He could go and decide to go for a strategy which is, okay, each month we increase the tariffs by 1 or 2%. You have some member of his cabinet that are calling for this way of acting. And you remember Mr. Navarro used to be the head of the commercial department under the first administration, Trump administration. Mr. Navarro says that it would be wrong and that you need to go at full speed and implement that very quickly. So there are discussions. So that's the reason why the tariff issue is so important. And it is also one of the reasons why it has impacted the equity market over the months of January up to now, very significantly, first negatively. And since those rumors that it could be gradual, the market has been able to recover.
So therefore, you see the effect of being negative if the introduction of those tariffs is too violent and too sudden. But otherwise, you think the market can absorb that.
I think that if it's gradual, if you enter into a negotiation, and if the people have really the impression that there is some kind of negotiation and it's not I would say, quote unquote stupid tariff implementation, just a reaction to block the border of the American economy to imports, if they see that there is some negotiation in the process, the market is able to support it. I think that if you have a full implementation, those kind of tariff very quickly, it means that volatility is going to be higher, that the people will have to digest such a measure, and they will have to appreciate the final impact of those development of such a decision on the earnings of companies. So at the end of the day, the market could support it, but nevertheless, it would increase the volatility. And anyhow, 2025, to my point of view, is going to be a volatile year for the equity market. So it could be one other factor, more than the interest rate, which is also impacting the volatility of equity market for me in the coming months. It will be another factor to support an increased volatility over the coming months on equity market.
Coming to oil now, Donald Trump, as opposed to Elon Musk, is very much in favour of further extraction of oil. To what extent can he do that, for instance? Because Alaska is protected from any exploitation of any extraction of oil. Could he go as far as starting to extract oil from Alaska, for instance, or is that beyond his?
Okay, executive order, if he has the issue of emergency. Yesterday, he repelled some of the measures that were implemented by the Biden administration concerning renewable energy, concerning electric cars, and those kind of things. Executive orders give him a lot of power, and he is able to act very quickly. Nevertheless, there are and this is something that people need to have in mind when it comes to Donald Trump's second term. You have things that Donald Trump can do with executive orders, but there are other issues where the Congress need to be involved because this is something that is that we need to keep in mind, and that's the way Mr. Trump is functioning. And then he modulates his action. He tries to enter into a negotiation. Look at what is happening with the Ukrainian war. During the campaign, it was I will resolve the issue in one day. And now they are saying it will take 6 months to get to a point where we are able. You need to have that in mind. You will have to resort to the Congress also, and I think that's something that we need to keep in mind.
Let's turn to markets now. Let's start with bonds and the 10-year Treasury bond. We were flirting with 4.8% very briefly just a few weeks ago. Is that a sign of things to come, or was that an exaggeration?
I think that it's not an exaggeration. We are at 4.55 this morning. The 10-year has found some support and some reconfort from the fact that inflation was not that bad. The last number of inflation were not that bad, even if core CPI remains quite high in the US and far from the 2% level that is the target for the central bank. Moreover, there is a reassessment of the ability from the Fed to lower interest rate. And I think this is quite correct. I think that people have come to one or two rate cuts. We discussed that over the last few months. I always told that the expectation were too high. I think that the market has come to a level that is acceptable to my point of view. 1, 2 cut. And quite surely no rate cut before June, to my point of view, if you have some cuts. Because also what you need to have in mind is that we had the new outlook by the IMF last week, and they had revised the GDP growth for the US in 2025 by 0.5%, which is huge. It's very rare that the IMF modify its forecast in such a big way in such a short period of time. 2.8%, 2.8% for 2025.
Okay.
So you have all the condition, which is, to my point of view, and I know that Mr. Hildebrand spoke in Davos yesterday, I think, and he said that he is surprised by the stubbornness of inflation and its inability to come lower. I agree with him. I agree. Inflation is not going to be that easy to control over the coming months, especially if you have tariff and those kind of things and the immigration issue, and you have strong growth in the US. To my point of view, I still believe that we are going to test the 5% on the 10-year bond yield in the US in the coming months.
Let's turn to stocks now. Can you give us your take on earnings season, which has just started?
For the time being, quite a good earnings season. The banking industry has been able to provide very, very solid numbers. But we will have the main numbers coming next week and the week after. About 50% of the numbers will be revealed over those 2 weeks. People are expecting a double-digit rate of EPS growth. They expect that margins are going to remain high and expand further. So there are a lot of very positive news that are embedded, that are in the EPS expectation for the time being. I think that I will look very carefully to the guidance of companies. People need not to forget that the US dollar index has appreciated quite significantly in the course of the last quarter of 2024. Will this have an impact on the guidance the companies are going to provide us? I think it's going to be very interesting to look at that. But for the time being, as long as the economic activity in the US remain at such level, you have all the reason to believe that the low double-digit rate of EPS growth that is expected by the market for the last quarter is quite achievable.
Therefore, are you saying that earnings will provide another leg to the bull market in the stock market? If that's the case, what would the market need to see in terms of EPS in order to continue to go up and up?
Okay. And I would say this, to my point of view, this is the only factor that can support the equity market run up further in 2025. The main reason being that, first of all, the valuation of the market is quite high. P ratios around 21, 22. It's quite expensive in historical term. It's quite expensive in absolute term. The risk premium on the US equity market has been driven down quite significantly. Interest rates, to my point of view, as I said, I think that people had taken into account the fact that the Fed is not going to loosen monetary policy as much as they were expecting a few months ago. So in terms of monetary policy, the support is going to be reduced. So it's really on the EPS that you can have something to support the market further higher in the coming quarters. What people will look, first of all, they want to see that there is an extension of earnings growth out of the Magnificent Seven into the other companies of the S&P 500, for example. I think that lately we had some indication that it is going to be the case. But we really need to see this increase in EPS growth from the 493 stocks out of the Magnificent Seven, which was running at close to 4% year on year. And people are expecting that it's going to grow by 10 to 13% in the coming quarters. So you need to have this development for the people to feel comfortable with the market. And the second element, because it is a key assumption by market participants, is that you need to see the margin to stay high or even to expand further in the coming quarters, because this is an assumption that people have in their mind. So it is very, very important that you don't have something happening negative on the margin in the US in order to be able to support further a move higher in the US. That's the reason why at the end of the day, in conclusion, I still believe that the market is going up, but not as much as it did in 2023 or 24. I have a target of 6,450 on the S&P 500 by the end of the year.
Let's talk about the dollar now. What's your take on the dollar, which weakened quite considerably in the last few days?
It has weakened, but I was surprised, and it is connected to the tariff issue. You know, at the end of the day, there is some kind of correlation between the fear or the expectation on tariffs and the US dollar. When the people were considering, and in the last quarter it was the case, Donald Trump was elected, so people said he is going to be very tough on tariff. It supported the US dollar. It's negative for the other currencies. And lately, the US dollar has been weaker because suddenly we had, as I mentioned earlier, this expectation that the tariff could be gradual. So there is a connection between those two factors. I still believe that the US dollar is overvalued in the medium term. I still have a target which I have revised because I was wrong on that. I have revised my target by the end of the year against the euro at 110. Because I believe in the short term, it's very difficult for the euro to come out of the doldrum and it's going to remain weak. So I think that it's a matter of the second part of the year where the US dollar should depreciate against the euro and going towards the 110 level. The main reason being that I think that by June, July, the ECB will have lowered their interest rate quite significantly. It will be a done deal. And I believe that the tariff issue is going to be less of an issue, to my point of view. It's going to be a gradual process and not a process of full implementation of very high tariff immediately.
As the recent rise in the dollar, do you see that as impacting earnings for companies 6 months ahead?
Yes, I think that and as I mentioned earlier, it's something that is very important. We need to see if in the guidance of the companies during the earnings season, if the companies are saying that they are suffering from this quick appreciation of the US dollar, and if it limits their ability to grow their business and grow their earnings for the first half of 2020.
Francois, thank you very much indeed. Bye-bye.
Bye-bye.